So today I'm giving you an update on some upcoming stock splits. If you've been here before, you know that SCHD is part of my dividend focused portfolio. It's the newest addition. And we're going to talk about the upcoming stock split with them, as well as why I added it to my portfolio on my journey to create passive income. So make sure to like, subscribe, hit the notification bell, and leave me a comment. So let's get started. The Charles Schwab U.S. Dividend ETF, SCHD, just put out this announcement on September 25th, saying that they will be having a forward share split on 20 of their Schwab ETFs, including SCHD. Here's a quick look at all of the ETFs that are going to be a part of the stock split that is going to be coming up. And this will apply to shareholders of record as of October 9th, 2024, payable after the close of markets on October 10th, 2024. The shares will begin trading at their post-split price on October the 11th. So I'm getting a little bit ahead of myself. Stock splits is something that have been occurring a lot with different companies. We've seen it recently with Nvidia and Broadcom, for example. This is something that companies do to adjust their stock price and give opportunities for more investors like you and me, the regular retail investors, to get in there and invest more, hopefully. So for those of you who are unfamiliar with stock splits, they don't change the value of your investment. As I said, they make their shares more accessible and appealing to investors like you and me by lowering that share price. It's just cutting it into slices so that there's more to go around. So when this occurs, this often leads to higher trading volume and a short-term boost in the stock price. But I'm in this for the long game, so that short-term hype is not what appeals to me. When it comes to investing, that is, SCHD is an investment for me, not a trade. So I already touched on the dates related to this upcoming stock split. And you can see here that SCHD is listed as a 3-for-1 stock split. There are some others on the list that are a 4-for-1 or even 2-for-1. So SCHD, when it comes to dividend focused ETFs, is one of those fan favorites. I think it's up there right along with Realty Income. It's a top tier dividend focused ETF that gives you exposure to high quality US companies with strong dividends. So I added it into my portfolio for that balance between income and potential growth in my portfolio. So some key points that stand out about SCHD is their strong dividend yields. SCHD offers a competitive dividend yield, which means consistent income without having to trade in and out of different stocks. It holds high quality companies. Here's a look at the top 10 companies, including Home Depot, Coca-Cola, Verizon, Texas Instruments. So it's packed with those companies that have a history of consistent dividend payouts, making it a reliable option for long-term investors. And when it comes to fees, this is another benefit when it comes to SCHD. It has an expense ratio of 0.06%, meaning you'll be keeping more of your returns and not losing it to a high expense ratio and fees. So just another point that makes it an easy go-to for people to choose if they want to minimize costs and maximize those returns. So you get exposure to 103 different holdings in this investment choice and a wide variety of sectors, as you can see here. SCHD gives you exposure to multiple sectors like consumer staples, healthcare, and financial. This diversification helps protect your portfolio during market downturns. So SCHD has consistently performed well, even during periods of market volatility, making it a safe harbor investment during the bear market or the bull market. And now, with the rate cuts just occurring and the stock split upcoming, SCHD may shine even brighter in the next few months. So, when it comes to the rate cuts by the Federal Reserve, we can see positive momentum in stocks like SCHD because those lower interest rates may lead investors to flock to and seek out higher yielding assets. And SCHD, as well as the other Schwab ETFs that will also be getting a stock split, may fit that bill perfectly as something to shift to. And as companies prioritize paying out their dividends, SCHD holdings will benefit. So these are just some factors that analysts believe will have SCHD on track to be a strong performer continuing going forward, especially in this lower interest rate environment. So, this potentially could be a good choice for all investors if you're looking for steady returns with minimal stress. Okay, so a little bit more detail on my position in SCHD. So, it was the newest addition to my dividend portfolio. I started off focusing on Realty Income, SPHD, and Main Street Capital. And then I added SCHD a little later on. And what I was doing was adding at least one share into my portfolio over on Moomoo on a weekly basis. So I've been doing that for over a year and a half now. So a few months ago, Moomoo has started to incorporate more investments having an availability to buy fractional shares. So I can mix it up now. I don't have to buy a full share every week, but I am still building on all four of those positions that I just mentioned. So currently I have 11.25 shares of SCHD in my portfolio. I'm up 7.60%, and I have an average price of $77.89. And as of the time of this recording, SCHD is $83.71 per share. SCHD is a part of my long term wealth building strategy to give me that balanced approach between risk and reward. So, just to share a rundown of a few other ETFs in my portfolio, I also have VTI and VOO. And I love to have ETFs in my portfolio to help give some of the things that we touched on today, that diversification, steady dividends, as well as just being a good foundation and not having to take on the risk of a portfolio full of individual stocks. So make sure to like, subscribe, hit that notification bell. Check out my referral links for both Weevil and Moomoo. They will be in the description and pinned in the comments. Let me know, is SCHD in your portfolio or are you considering adding it? Thanks to Don for leaving a comment yesterday and bringing this to my attention of this upcoming stock split. And remember, it's okay to start small, be consistent, and just watch your wealth build over time. Don't wait, get started. Thanks for watching. Okay, bye.